Hi, thanks for tuning in. You're watching Ask BQ, a show where all your stock market related queries get answered. I'm Smriti Chaudhary, and before we begin, I'd like to remind you that you can send in all your questions through the YouTube live chat or through the WhatsApp number that's flashing on your screen right now. You can also send in your questions to any of our social media channels. Now, let me introduce you to our guests for today. We have with us Mr. Sameer Dalal, who is Sameer Dalal, who is with Natwaral and Sons Stockbrokers, and Hemen Kapadia, Senior Vice President, Institutional Equity, KR Choksi Stocks and Securities. Welcome and thank you for taking the time out. Now, before we jump into the questions, we usually start off with a specific stock. And that for today, the segment is called BQ Focus. And the stock we're focusing on today is Wipro. Now, Wipro is set to come out with its earnings for the second quarter soon. Now, the growth is set to be muted like its peers. This is mainly because of the inflation and interest problems in its largest market, that is the United States. That has led to discretionary cuts in its clients. Now, let's look at a few numbers. Wipro is expected to deliver a revenue growth slightly marginal increase from the previous quarter at 22,919 crores, EBIT at 3,517 crores, margin expected to expand slightly to 15.44% versus 15.15% in the previous quarter, and net profit at 2,905 crores. Now, there are 6 key factors that we'll be looking for in the management commentary. First is when will the conversion of deal to revenue will pick up. Now, while the deal pipeline has been quite constant, the revenue or the top line growth isn't being seen in any of the IT companies. So that will be the first point that we'll be looking out for. Second, we'll be looking at when will Wipro start developing industry matching organic growth. Now, the overall growth in the industry is slightly slow, but Wipro is specifically in the negative territory at this juncture. Third is the quantum of salary hikes to senior management and rank and file that will be effective December 1. Now, it's important to remember that Wipro has deferred its salary hikes to December 1st. It was supposed to be in this quarter, which is why we can see a marginal increase in the margins in this quarter. The fourth is the impact of senior level exodus. Now, we'll be seeing how Wipro will clarify on the impact on the business. Now, the latest exit is of its longtime CEO, Jatin Dalal. The fifth is the margin levers left for the company. And the last one is the management commentary on deal pipeline and growth guidance for the October to December quarter. Now, let's open the floor to our guests for today. Let's take a fundamental check on Wipro first. So, Sameer, what are your views? How are you viewing Wipro in a long-term sense? And is it a good juncture for investors to buy, or if they already own the stock, to continue holding the stock?
Yeah, so good morning. And, Wipro is actually one of the counters that has been a big disappointment, if you ask me, in the IT space from a longer term perspective also. In the sense, if we look at the past, they've really not delivered that significant returns to shareholders, right? The stock it saw a run up and then, of course, it came back down. And one of the core reasons for this underperformance is the fact that they have not been able to grow when the rest of the industry was able to grow at a significant pace. This problem for Wipro probably will continue. No doubt their order book they're getting orders, but obviously they're not able to deliver, or the past order, the new orders incoming are not as high or not as significantly changing compared to what the orders they're completing. And if they're not able to change that trajectory anytime soon, I think Wipro is going to be a bit of a disappointment for shareholders going forward as well. Now, you rightfully said that you're seeing a bit of a margin hike from the fact that they're not increasing their salaries till now, and they will start in December 1st. But the fact remains that they are going to have to increase their salaries. Otherwise, you're going to see a lot of more exits coming about for the existing top level or mid to top level executives, from the fact that, at the end of the day, the other companies are continuing to do so. And they are also not looking to hire aggressively, but they may take people at key points that they require whenever they require. And it's better to have a trained personnel than, someone raw. So that becomes a big challenge for Wipro as well. So the margin increase is not going to be a sustainable margin increase because eventually they're going to have to give it back, and that is not good. So if you were to ask me on a fundamental basis, even though valuations are cheaper than everybody else in the IT pack, especially compared to the larger ones, the fact that they're not able to grow and these overhangs remain for them, I believe the valuation multiple re-rating is definitely not on the cards. What would be the reason why the stock would continue to see an upside would be if they were able to come back with the growth numbers. And again, that in this kind of environment which you talked about, where there is a bit of deferment happening for execution of orders or even fresh orders being placed by companies in the Western world, which is the biggest market, US, Europe, and all of those regions. I don't see any reason why Wipro should stand out. So from that angle, I think there are other opportunities in the IT space. Wipro is going to be a laggard. So if one were to take a call, I would much rather in the IT space own a TCS or Tech Mahindra. Well, Tech Mahindra may go through its own bit of issues, but I would still rather own some other
Yeah.
companies which have more potential to grow compared to a Wipro who's been struggling in the past. And until they give us significant reason to believe otherwise, I think I would not want to be buying the stock for sure. Those holding on to the stock, if you feel the dividend yield is good, if you feel that those buybacks are helping, you can continue to hold and keep exiting at the buybacks whenever they keep giving. But from the upside point of view, I think from in the near term, in the next 1.5 years, I don't see any major change in the stock price happening.
All right, fair point. What are the Q on the charts, Hemen?
Yeah, a very good point to you, Smriti. Thank you for having me on the show. Yes, it has been a laggard. It has been an underperformer very clearly, as Sameer Bhai was saying. I have a slightly different view. Technically, the worst things are almost behind us. But I would like to state a caveat that we need a monthly closing above 444. We're at 411 right now. There has been underperformance which it hasn't been able to shake off. But as of now, some of the long-term mechanical indicators are showing some sparks of life. But yes, if this has to fructify into something concrete on the price action, we need a close above 444. So I would say cautiously optimistic. Yes, if you look at the other stocks, Wipro has gone nowhere and doesn't promise something spectacular. But I feel there is a little bit of scope for a catch up to other stocks. So above 444, there would be technical green shoots and the stock should improve. But till then, it's going to flounder over here. It has been for the last probably 1.5 years. And till this doesn't happen, I guess it remains here.
All right, fair point. Let's start with the questions. The first up we have from Mr. Rajesh Maheshwari, and he's talking about Dixon Tech. He says that he has 50 shares with an average price of 5013, and he wants to know the outlook in the short to medium term, whether it makes sense to stay invested or exit at a suitable level. Let's go to you first. Dixon Tech.
I would suggest a hold. Higher tops, higher bottoms. We have been in a mature uptrend over the past probably 1 year or so, and it doesn't seem to be in a mood to sort of cool off any time. Despite the move up, it's been a significant move, Pratik. 2600 to 5500 it's a big, huge move. No particular overbought situation yet, no levels breaking. So I would say hold on. In terms of safety, 5200 and 4900, very two important support levels. If they break under any situation, I would be cautious. Otherwise, hold. Further upside seems to be possible to 5700.
All right. Sameer, do you agree? Anything on the fundamentals that you'd like to add for Dixon Tech?
So fundamentals of the company are extremely good, right? If you look at it, the kind of growth, the opportunity that remains for Dixon Technologies is excellent, given the fact that Make in India, especially the electronic segment, is something that the government is very focused on. It is one of the big areas where we want to reduce the import dependency, and that's where Dixon actually comes in a very big way. In fact, they just recently got an order from a huge telecom company for manufacturing of the mobile phones in India itself. They're focusing on laptops, they're focusing on white goods like ACs, fridges, washing machines, and the likes. And we're still very dependent on imports. So I believe the opportunity for Dixon is excellent. Now, you mentioned earlier that this is a person who's looking for a short-term view. So, in the short term, it's difficult for me to say what is going to happen in price action because valuations are again very, very rich when you look at Dixon Technologies. And these valuations are justifiable given the fact that growth is very strong in the future. But is there upside in the near short term? That's a difficult call that I think I would follow the technical analyst more than a fundamental analyst. But if the person has over a 2-year horizon, I say stay invested in the for a very 6-month short-term kind of view. I think what Hemen said, maybe there could be upside to 5,700, but it's very difficult for a fundamental analyst to say, given the where valuations are that there is upside from the near term. But yes, from a 2 to 3 year point of view, I definitely hold on to Dixon Technologies.
All right. Next up, we have a question in the pharma space, and this is from Archie Babu, and he wants to know about Piramal Pharma. Now, he holds a share from the demerger, and he wants a long-term view on that. Sameer, let's go to you first. What's your fundamental view on Piramal Pharma at this point?
So actually, Piramal is one of the companies, the pharma companies that we don't track, so I won't be able to fundamentally look on them.
Okay. Anything in the pharma space that you like?
So I believe the pharma space has excellent opportunity when you look at the likes of Sun Pharma and Lupin and Dr. Reddy's and all of these companies still. Because what we have been saying historically and also which continues to hold steady is that the market opportunity, so where's the most profitable market? The most profitable market for all of these companies is the United States, where there are huge drugs which are still patented, which are coming off patent. And a lot of these companies are focusing on capturing some of this market share once they come off patent, or even launching it at a time with the so-called blessing of the existing patented player, where they get some amount of market share at a lower price. So the ANDA opportunity still is very strong. So all of these companies which have huge ANDAs pending there, which with huge drugs coming off the patentation, will throw out an opportunity. But where Sun Pharma for me stands out from all of these companies in the large cap space of pharma is the fact that they are not only focusing on that, but they are also focusing on branded generic. And this is something very unique in the sense that even though the product is a generic product, what they're doing is they're creating some sort of brand around that generic, which kind of can work as a pull option. So the US market, if you know, and the pharma is a very push kind of a situation where the doctor does not prescribe the name of the medicine, but just the medicine itself. And then based on who you go to as a pharmacy will decide who they are buying from, and they will give you that medicine. But when you differentiate yourself the way Sun Pharma is doing on a lot of these specialized drugs, gives a huge opportunity for growth and recall and controlling some amount of the market. So I believe Sun Pharma does stand out. Yes, the stock has run up. Yes, valuations have moved up. But like I said, the growth opportunity in the US is still extremely large. These companies have good cash flows, and I believe that they will continue to do well. So Sun Pharma would be the top pick, followed by Dr. Reddy's, third Lupin. And in the mid-cap, Torrent is one of the companies that we believe has a great opportunity, followed by Alembic Pharma.
All right, fair point. Let's take a technical check on Piramal Pharma as well. Hemen, do you hold a view? From what I can see on the charts, the stock has given gains of 41% in the last 6 months.
Frankly speaking, Smriti, the data is a bit less. I would need some more data to take a slightly longer term view. But with whatever data we have, you're right, from the bottom, it's bounced back. But currently, it's spent 14 weeks over here, hatching eggs, doing nothing. What I mean to say is currently there is no trending bias, Smriti. Support comes in at 95, resistance comes in at 109. But the setup isn't looking bad. Things would go awry only if it closes below 95. Otherwise, I would take this as a consolidation and an uptrend. So we take out 109, it would mean a resumption of its up move. So currently, it's in a no trade zone. I would say hold on once again. Paucity of data, that question mark remains. But otherwise, it doesn't look bad. Close below 95 would be the first worrying sign.
Okay. Now, next up, we have a question from Mehek, and she wants to know if there is a specific sector that you will be avoiding at this point, considering the geopolitical tensions, the Israel-Hamas war. Um, let's start with you, Sameer. Samida, what's your what sectors are you currently avoiding at this point?
So sectors where we don't avoid sectors because of certain geopolitical issues, if you ask me. Um, but yes, if you were to ask me why I'm avoiding, not because of geopolitics, one sector I'm avoiding because of valuation basis is the FMCG space. And when I'm talking about FMCG, it's the likes of Lever, it's the likes of Dabur, Marico, where we find valuations extremely high. Uh, from the fact that we are not seeing the kind of growth that we want to see, and we are not able to justify why stocks are trading at 40-50 times when growth is around 8 to 12% on the top line and 15 to 18% on the bottom line, given the fact that they've been able to increase margins, not because of operating leverage to a large extent, but more so because of gross margin expansion, because of increasing prices, which we find it difficult for it to continue or sustain at these higher margins and keep increasing them. But if I were to take a call on the geopolitical because of Israel Hamas war that is going on, probably what you could see some difficulty is in the difficult to call on that, but maybe IT space might find a little bit of difficulty because that could create some more problems, or even from the fact that oil and gas industry, the downstream HP, BP, IOC, who are very dependent on oil and gas prices, and if those prices move up, their profitability could be hit. So maybe some of those counters, but like I said, we don't take calls purely on geopolitics, because if the war escalates, I think it will be all sectors that get hit in the sense that you'll see a sell-off across the board.
All right, fair point. Next up, we have a question from Ketan, and he wants to know about OFSS, the Oracle Financial Services. He currently has a holding of about 1,000 shares, and he bought it at 3,792. Hemen, let's start with you. He wants to know if he should continue holding the stock at this point, OFSS.
I am assuming his point of view is not very short term. If it's a short term view, it's a sell on bounce. Otherwise, if it's 1 year or more, I think it's a clear hold. We walked in an intermediate direction, but the setup on the long term charts has improved over the last some time. So I would say we are comfortably placed. Currently, 4250 is a resistance level, followed by 4400. So as of now, if he wants to keep a stop loss, I think it's an investment. So I'm not sure if this is applicable at this point in time. 4,000 is a near-term level. 3,750 is a make or break level on the slightly longer-term charts. Technically speaking, we are in an uptrend. I believe we continue to remain so. Hold upside possible targets over the next 9 to 12 months, 4,500 and more.
All right. Any view on Oracle, Sameer?
Yeah, so this is again a company that has been showing very slow growth, and at the end of the day, India is a growth market. So if you were to really say why a stock should be valued expensive, is because they're able to grow compared to the rest of the peers. And Oracle has been one of those companies I believe has not been able to deliver on that growth. If I were to just think, if I remember my numbers correctly, they had done in about FY20 roughly around 3,400 or 3,600, somewhere in between that as a top line revenue, which is barely moved up to 4,300 crores in FY23. Now, that is very insignificant compared to the fact that IT companies and industries has been growing at a faster pace. I think there are better opportunities out there. Oracle is obviously now one of the companies that we would be buying, and I don't have a call for somebody who's already invested, but I would assume it'd be better to get out and get into something where growth could be higher.
All right, fair point. Next up, we have a stock in the hospital space, which is Rainbow's Children Medicare. Now, this question is from Muiz, and he wants to know if it's worth investing in the long term. Now, from what I can see, they have pretty good top line numbers and even the bottom line numbers. So, what is your fundamental view, Sameer, on the Rainbow Medicare?
So, unfortunately, again, Children's Rainbow Medicare is a company that we haven't covered. But on the hospitality space is something I can tell you. I think the opportunity is extremely large. The business model that is changing in the fact that we're able to get more beds used more efficiently. You're able to figure that companies that are trying to figure out how to work on a slightly lower capex model kind of a business where they rent in certain equipments and things like that. I think the growth opportunity for the hospitals is quite good. India has had this opportunity of importing. I don't know if the right word is importing, but inpatient coming from abroad, and I think that opportunity will probably keep manifesting and growing further. So I believe the hospital space does have opportunity. Fortis is one of the companies in the space that we do like. Apollo, of course, is the market leader, but again, there where we find difficulty is the valuation. Fortis also valuations are not cheap, but again, their occupations have been a little lower for the beds, and as that goes up, I think the operating leverages will kick through. So Fortis at the moment is the one we are recommending, and we had recommended in the past. But Rainbow Hospital is something we don't cover, unfortunately.
All right. So Fortis is your pick at this current juncture. Hemen, what is your view? What are the charts showing on the Rainbow Children's Medicare? Now, from what I can see, the stock is slightly under pressure today, but has delivered about 33% in the 33% returns in the last 6 months.
Yes, Pratik. We have been meandering aimlessly for some time now, and the some time is say almost 15 months now. Large range, downside is 140, upside is 190, and we've been here. Sorry, I looked at the wrong stock. I looked at Rain Industries. I'm looking at Rainbow Children. We once again little bit of less of data, but height of high bottoms. We are in an established uptrend, so not too much of data to go on. But whatever data we have is very clearly in an uptrend. Support comes in at 1,000. I believe currently, like you said, a little bit of pressure intraday, but it's forming a rounding bottom on the weekly chart, which is basically a bullish formation. The close of 1140 is a must. That happens, it means the resumption of an uptrend. And whatever data we have, we seem to be safely ensconced in an uptrend. I believe 1140 needs to be taken out. The warning signal would be 1,000. So a range, but looks positive.
Now, before we wrap up, I'd like to know your top picks across sectors. Sameer, what are the stocks that you recommend at this point?
So one of the stocks that we've been recommending to our clients and we've also invested as a disclaimer, I would like to say, is a company called Computer Age Management, which is CAMS. The mutual fund industry in India is growing at an excellent pace, and we believe that over the next 5 to 6 years, we're going to see this pace continue, given the fact that the exposure to the financial savings when it comes to equity is still very small, and especially the mutual fund industry compared to what the global averages are. Now, CAMS is not directly a mutual fund, but what they do is they service the mutual fund industry. And for every transaction that is done in the mutual fund industry, 67 to 68% of those transactions are serviced by CAMS. And as that industry goes, we will see that their ability to increase their turnover will keep increasing, and the operating leverages will continue to kick through, and the profitability will increase. Now, no doubt, CAMS is also trading at an expensive valuation of 40 times earnings. But like I said, because we believe that the next 6 to 10 years will be amazing for this industry, and there are other growth levers apart from just mutual funds. There's government talking about putting insurances into DMATs and managing that. There is PMSs, AIFs, all these industries which will continue to grow, and they will also require servicing where CAMS will be participating actively. We believe the opportunity there for them is extremely strong. So that is one of the stocks we've been recommending. And the second stock I'd like to point out, even though I mentioned that FMCG is a sector we are avoiding, there's one stock within the FMCG space which differentiates itself out from a regular FMCG product. It's Zydus Wellness. That is the company that owns the brands like Nutralite, which is the butter, alternative butter, low-cost butter, sugar-free, which controls the market when it comes to the product that is not sugar but still sweetener. They own Complan as a brand. They own Glucon-D as a brand. We believe the growth opportunity of the health and wellness space within India has a huge opportunity. We are still at a very, very nascent stage. The next 10 to 15 years is going to be phenomenal for this company as acceptance of their products keeps increasing, and the thought process of health and wellness increases within the country. So that is another stock that we've been focusing on. Low debt, probably in the next year and a half will become debt free. They're looking at growing their business. They're looking at increasing the number of products that they offer. Their reach has also been increasing. So we believe that is something that we should focus on. I mean, that is one company we focus on. And again, we are invested and we are recommending to our plans to invest in them as well.
All right. So CAMS and Zydus Wellness. Fair point. Hemen, let's come to you. What are your top picks?
There's this stock which I like, NMDC. 12-year breakout. We spent 12 years consolidating, and now after 12 years, it's breaking out. So it's not a very short-term sort of a call. You'll have to keep it for some time, but looks great. And if it gives a breakout, it has after 12 years. I think we have significant upside over there. So NMDC is something which is a pick. From a slightly shorter-term trading point of view, I think Sun Pharma looks very interesting. We've been consolidating over here for the past 10 weeks or so, and now we are setting the stage for an upside breakout above 1170. So from a positional point of view for a 4 to 6 week trade, Sun Pharma, one can expect around 7 to 8% upside above 1170. Sriti.
All right. Thank you, Hemen and Sameer. That's all the time we have for today. It was a pleasure having you on the show, and thanks a lot for answering so many questions for our viewers. And viewers, we'll be back tomorrow, same time, 11:30 a.m. But until then, do keep writing us with your questions, and we'll take them tomorrow, same time, 11:30. Till then, stay tuned to BQ Prime.